All right, it is 2:30 Eastern. Todd, why don't you go ahead and start us off, please?
Sure. So hello, everyone. Thanks for joining us. I'm Todd Atlas with EO Raleigh Durham. This is our third virtual learning event out of our series we're calling Coronavirus in Your Business. After we killed pretty much all of our in-person learning events through May, Matt and I scrambled to ask ourselves the questions, what kind of content we might want to know about right now, and help build these packages together. So thanks, Olivia and EO Global, for getting the word out about these to the rest of our kind of EO community out there. Matt and I would love to hear from you. Our email addresses are going to be in the chat window. So you guys can email us about any content you'd like to hear or see from us moving forward. And we'll continue to try to assemble experts and keep the learning coming, albeit virtually now. So we'd also like these to keep these interactive. Matt will talk to you a little bit more about that in a second. But before we get going, everyone should have received invitations for the next webinar. That's going to be on Wednesday. And yes, you can invite your key execs and guests to those. The next one on Wednesday is Eastern, 2 o'clock. That's Wednesday the 25th. That is with contingency planning with Randy Nelson. So Randy's a former Navy submarine officer. He's an EO Raleigh Durham chapter founding member of 20 years, and he's a best-selling author who will be helping us process through creating a contingency plan for our businesses. Today's speaker is Rich Russakoff. Many of you have probably met him before, as he's already been teaching EO members about bank financing at the MIT Entrepreneurial Masters program for over 15 years, and he wrote the last chapter of Rockefeller Habits. We also have on the call Bob Young, who's an EVP from Fifth Third Bank, as well as Sherry Breen. Rich will be asking their thoughts on some of the banking-related topics he'll be discussing through the webinar. Our learning chair is EO Raleigh Durham, Matt Zeman, and he is going to be moderating today's session for us. And I'm going to turn this over to Matt to kick things off. Thanks, Matt.
Cool. Thanks, Tom, and thanks everybody for being here. This is quite the attendance. It looks like we're at 200 already. It's incredible. So a couple housekeeping items. Everybody is muted to begin with. If you have a question, there's a Q&A panel. Go ahead and put your question in there. If you know the answer to a question someone's asked, feel free to put your answer in there. If you like a question someone's asked, hit the thumbs up, which allows us to prioritize it and get those questions over to Rich during this presentation or during this webinar. Today's webinar will be recorded and shared, so please don't share anything here you wish to keep confidential. We're going to be sharing Rich's deck out and some of the miscellaneous items that he is going to go over with us on our website, eoraleigh.com/coronavirus. And I'm going to put that in the chat window here shortly. That's also where you will find the recording of this webinar as well. With this call, we also know that there's going to be many of you with specific questions related to your specific business, and in 45 minutes, we can't get to them all. So Rich has agreed that any EO member who has additional questions, you can schedule a free 30-minute call with him, and he's clearing his schedule to help EO out for this for the next few weeks. So I'm gonna have a link to how you can schedule that call with him at eoraleigh.com/coronavirus. And with all that being said, I'm going to turn it over to Rich Russakoff. Rich, go ahead and take it. Thanks for coming.
Thank you. And Matt, would you put up the first slide, please? Okay. First of all, I want to thank you, Matt. And I wanted to say that Randy Nelson was my first EO client after I did a seminar for what was then Birthing of Giants. Matt, next slide. We're in a situation right now that is unprecedented. You know that. Nothing like this has happened in 100 years. On the other hand, many of you have had disaster situations having to do with weather or Katrina or 9/11, and entrepreneurs that survive these times come out stronger, come out with less competition, and come out with more opportunities. What I want to share with you today are some nuggets on what you should do as an entrepreneur to make sure that you're on the other side of this. And it's important that you take responsibility and stay focused on the key things you need to do right now. Next slide, Matt. This is a deer in the headlights. It's really important that you develop a plan right now. If you're going to talk to banks, or you're going to talk to SBA or any other lending source, it's critical that you have a plan in place. What they want to know is what you will do moving forward. And even if your business is closed right now, when you come back, what will you do? How will you bring it back? What will you do differently? And how will you use the revenue that you'll be looking to get financed? Next slide. So let's take a look at SBA and what's available right now. And what I want to say is that what we're going to share with you today, by 5 o'clock today, by 6 o'clock today, it all may change. It's a fluid situation and there are more things happening, and SBA will be offering sweeter deals that we don't know about yet, but will. Couple things you should know here. If you go for an SBA loan, guarantees will be required. Anyone that owns more than 20% of the company will be expected to guarantee the loan. Who qualifies? Generally, if you've been in business over 2 years and you haven't had a bankruptcy in 5 years, and you're able to show what the hardship was you suffered, then you should be eligible for the loan. Payback periods. I just spoke to someone I helped get a loan for 9/11. That was a disaster relief loan. It's a 30-year loan, 4% interest, and he's been paying it back monthly since 2001. Timelines. Fast track loans are under $350,000, and they're much easier to get, and there's less requirements for fast term loans. You probably have to sign a personal guarantee, second liens. If you pay it back earlier, there's no prepayment penalties. Probably you can get an interest-only loan or a suspended period of time before you have to pay loans. And I understand from what Robert Young has shared with me earlier this morning from Fifth First, that there may be legislation coming to take that $350,000 maximum to $1 million. So it's your job. Just go on that SBA website, keep looking. Things are changing all the time. Last week, North Carolina wasn't in the program. Now it's qualified. Everything's being streamlined. So let's go to the next, let's go back to the slide, Matt. Okay, so I think we've covered everything on this slide. Let's go to the next slide, Matt. Okay, so the first thing I would recommend you do is talk to your banker if you currently have a bank loan and ask them what they recommend and what the bank will do to help you. And Bob, are you on the line to talk right now? Bob Young?
I'm going to unmute him right now. Give me one moment, and we will unmute Bob. And Bob, that should be you, right? Can you hear us?
That's me. Thanks, everybody. How are you guys?
Hey, Bob, would you share with us what Fifth First is
Third.
Fifth Third, I'm sorry, is doing right now in terms of helping people that are business have business loans with you, and probably what you guys are doing, other banks are doing as well, or will be.
Yeah, I'm happy to share. I think a lot of the banks are talking a lot to share best practices at the higher levels. Fifth Third specifically, we're taking an avenue of different perspectives, looking at it from the consumer side and also the business side, realizing that they really do go hand in hand for a lot of our customers, and a lot of our customers really want to make sure that their employees are taken care of too. So the bank announced yesterday, and it is public record, that when it comes to auto loans, credit cards, the bank is willing to review those and see if there's the ability to defer any payments. And then specifically on the business banking side, which is what I manage, we are actively now reviewing requests to defer payments, both for conventional facilities and for our SBA facilities. And if you want, I can get into the specifics of some of that, but high level, we are very actively reaching out to clients, seeing how they're doing, and seeing if there's opportunities that they might need some of this temporary relief.
So obviously you're saying, don't be afraid to go and talk to us. Come to us and let us give you advice, including what might be the best options if your business is closed or if it's severely losing money on a month-to-month basis.
1,000%. And I would even go a step further, that the directive that we've been given to our bankers is to proactively call clients and see how they're doing. We want you to be open and honest with us, because we know this is hitting everybody. This is a lot different in some respects than 2008, 9, and 10. This is really hitting a lot of Main Street really hard, when you can't open up your restaurant, when your dental office needs to close, when you can't get people to come in to run your manufacturing plants. And so the more information we have, that gives us the ability to hopefully put you in a better position. Because one of the things we want to know is, what are your overhead costs? What are your employee salaries? We know you want to keep paying them during this time. How much cash flow do you really need, and how long is that going to last, do you think, if you do a forecast? So a lot of it's some really in-depth questions that we want to really get into and understand, but it's really coming from a place of we want to help.
Thank you. Thank you, Bob. Let's bring up the next slide.
And Bob, I'm just going to call your attention to the Q&A panel. If there's things there you want to jump in and answer, or Brenda would like to answer, that'd be great. And then I'm going to keep your line open so that we can bring you back. Or I'm going to mute you now, but I'll bring you back a little bit later. Just raise your hand for me or let me know. Back to you, Rich.
Okay. Bring up the slide, please. It's the one funding possibilities.
One moment, I'm doing it now. There we go. I'm going to go back one.
No, we want to go. There we are. Okay, so these are considerations right now. Let's take a look at vendor financing. Most vendors are going to be willing to extend you terms if they can. Take advantage of that. The more you know, the more you ask. Ask is the most powerful three-letter word in the English language. The more people will say yes. Everybody's in this together right now. With the SBA loans, these are terrific loans, and it looks like they're going to get better and better. And just go to sba.gov and stay on top of it, and we'll share more about that. But the things that I just said in the first slide are very important, and the most important thing you can do right now is get your documents in order so that you'll be ready, because SBA can't move forward if you don't have your documents in place, and we're going to talk about that. If you go to personal, family, credit cards, etc., if you make a loan to your business, I would consider it a loan that I would put on the balance sheet to be paid back, and allow yourself to get interest and establish terms on that. Family and friends that may help you, you may want to do the same thing, and I would recommend you put together what the terms would be for those loans so that there's no surprises and family members don't end up 2 years later not inviting you to a Thanksgiving dinner. Credit cards. If you have substantial credit card debt, with high interest rates. I would strongly recommend that if you can move those cards to another card where it's interest-free for a period of time, do it. Get that interest off of your monthly payments. And Matt, I know that one of the sponsors of your chapter is Amex Express. And what I'd like to ask you to do is share what Amex Express is offering to EO members, particularly in your chapter, and how valuable that can be right now.
Yeah, so American Express Corporate is a sponsor for EO Raleigh and a number of other chapters, but I know we have EO members from across the country on the phone. So I'm going to put their information in the at eoraleigh.com/coronavirus. What is different about the corporate program versus the traditional business program is if you're spending $4 million or more on your credit card, you can do it with American Express Corporate with no personal guarantee. And that's a huge difference versus the normal business. So it still looks like a platinum card. You still get your reward points, but there's no personal guarantee. So if you can move over to that, I would highly recommend it. And then they also have a variety of other programs that are doing some unique things for this specific time period as well. So I would put American Express Corporate's contact information on that website as soon as this call is over. And I encourage any EO members who are not familiar with them to go ahead and reach out. Back to you, Rich.
And Matt, there's also extended pay programs as part of that, so you don't have to clean it out every 30 days. Is that right?
On some people, it depends on which program. So they have different options. There are options.
There again, ask, find out, knowledge is power. Client payment, first of all, if you're on the end where you have cash, you can go to the people that you owe money to right now and say, for cash, I will do discounts, and take advantage of that. On the other side of that is a client prepayment program is where you give incentives to your clients. You give incentives for prepayment, and therefore you would get the money earlier. Factoring is still an opportunity, and I would recommend you consider that if you've got good, solid receivables. But all of this has to align with what you're currently borrowing and what fits in with that. Next slide, Matt. So let me share with you what are the things that you need to get together right now for an SBA guaranteed loan or an SBA disaster loan. And let's go to the next slide. First of all, they're going to want to see cash flow projections. So they want to see cash flow projections for the last year, which is probably the equivalent to what your P&L looked like for the last year. But if you're doing cash flow projections, you can show what you did this year up until the time that this virus hit, and then show that at some time in the future, what your cash flow projections will be when things get back to the new normal. The other thing you may want to do is show where you are right now. What do you need to pay? What are your obligations? And what's the gap between income you have and revenue you'll need to pay your bills? SBA is going to ask for 3 years of tax returns. If you have not completed 2020, and you can right now, I'm talking about 2019, now is the time. Get that in, because they're going to want to see that information. We're going to talk later about recasting your tax returns. So if you're not showing a profit, or you haven't shown a profit for tax purposes, you can show them where your salary is, what were some of the things that you've taken out that are discretionary expenses, and we'll talk more about that because that's part of the story you're going to tell. There are online with SBA, you can see the forms to fill out for personal financial forms, and you're going to need to give them that information as well. They will want to see a balance sheet, your current balance sheet, and one of the things I would suggest if you're doing the balance sheet and you have things under short-term liabilities that really don't have to be paid back right now, move them to longer-term liabilities, because they're going to look at your assets versus your liabilities. So there are a lot of little tricks you can do here that are in truth accurate and will make your P&L look better. Your current profit and loss statement through the first quarter, because you'll probably be out of the first quarter before you put anything together, is critically important. And check your credit score right now. If your score is 650 and above, that's good. The higher it is, the lower potential interest rate you're going to get. So you want to make sure that when I have an article that you'll be receiving about checking your credit scores. Virtually everybody's credit score has something in it that's incorrect. And now's the time to correct it. So that's part of getting your house in order. Personal guarantees, they're going to want a guarantee on your home unless that changes, because that could change by the end of the day or over the course of the next 2 weeks. But right now, because SBA had issues in the past with loans that weren't paid, they were required to get personal guarantees, and that would include a lien on your house or a second lien. So you need to figure out, is this right for you? Are you comfortable with this? If you go with the fast track loan, there will be less requirements. If you go for the loan that right now is up to 2 million and may soon be up to 5 million, there are going to be more restrictions on it. So knowledge is power. And I'd like to say I have all the best information now, and I do, but it'll be different tomorrow. So we have to keep track of that. Next slide, Matt. So what I want to talk to you about, recreating your budgets and cash flow projections, because whoever you're going to be borrowing from, unless it's a credit card or something like that, they're going to want to see your budget and cash flow projections. And if you've never done a cash flow projection and you get on a call with us or you look for information we'll be putting out, we'll tell you in detail how to do it. But just quickly, it starts with what's your current cash situation going into a given month, what revenue is coming in, what expenses has gone out, and what is your cash position, positive or negative, month by month. This is also a wonderful tool, if you're not using it, to learn how to monitor and manage your money, and it will give confidence to a lender that you understand the dynamics and you know what you owe, when you owe it. So for example, if your insurance is $12,000 and it's in quarterly payments, don't put it as $1,000 a month. Put it in there when the payments are going to be required. Bob, do you want to make any comments on cash flow projections before I get further into budgets?
The only thing I would say there is when you do your cash flow projections, always, and you might have mentioned this, sorry if I missed, I was trying to answer some questions, is to have the assumptions there as well. You know, so if revenue is going to be X and expenses are going to be Y, well, why is that? And, you know, the bank wants to make sure that you're thinking through the process, helping the bank think through the process as well. Same things that the SBA would want to see also. That's
a great point, because anytime you do a budget or a projection, they're based on assumptions. And the more you can spell out what those assumptions are, the greater confidence it gives to the lender. So let's go to the next slide. Thank you, Bob. So right now, what I've found with the clients I've worked with over the years that have weathered the storm, whether it be 2008 or whatever it is, phase one, eliminate the fat. Anything that's fat or is not something you absolutely need to do right now that isn't going to make you money or save you money that you can eliminate, do that. Go through your financials. I find when I look at my clients' financials that they're paying for cell phones for people that haven't worked for them in 2 years. And they're paying for subscriptions for things they don't use. So take a look and see where there is fat and cut it out. Phase two, this is what for you to decide. When do you reach the point where you have to take the next round of cuts? And that's getting down to the bare basics. And what I would like you to consider is look at this like a prenuptial agreement. Make the decisions now. Plan for when that's going to come. So it's not an emotional decision at that point. It's the logical decision that you planned out, which may mean laying off more people, letting people go, cutting other expenses. And then phase three is cut to the bare and figure out when you get there. And you can start off with phase three if you want, but what are the bare necessities you need to have a business to come back to if your business is closed, or to maximize what you can do right now? Next slide, please, Matt. So let's look at budgeting considerations. Obviously, if you have a cash cow right now, if you have one profit center that will do well in this economy, focus on that and focus on increasing the sales. I'm working with a client right now in Houston, Texas, and they do audiovisual equipment. We're working on a program for them to do streaming for churches where people can't come to the churches, and set that up for them, and which will also set up a way for them to collect contributions from the congregation. We're also looking to talk to information officers of companies and say, do you want to upgrade your equipment for conferences, working at home or throughout the country? So if you have a profit center, and if you can think out of the box and increase those sales on that profit center, that's critically important. Savvy inventory management, just-in-time inventory is more critical now than ever. Just have the inventory you need and know that you have access to what you want. This is a very good time to take stock of your inventory and look at what you want to reduce, if at all possible. Accounts receivable management is critical. Contact your clients. Ask them how they're doing. Ask them what they need and how you can work with them. And don't be surprised if you're not going to get a payment this month, next month, or the following, and try to set up with them some sort of a payment plan. And also, I would recommend for accounts payable that you let your clients know where you are. And if you owe somebody $10,000 and you can only pay them $1,000 a month, let them know it'll be $1,000 a month till things get better. It's very important for them to hear from you. Be proactive on this. This is all part of the plan. If you have chargebacks or issues like that, it's probably because your processes aren't sharp enough. Take a look at that. Make sure your processes are as tight as they possibly can be so you don't have losses of that nature. Credit card, again, what are you borrowing? Can you move your credit cards to interest-free cards, and how will you use credit cards? And find out what credit card companies are offering special programs right now, because they will be. Next slide. When I got my
Hey,
first,
Rich,
yes,
I'm just letting you know it's 3 o'clock and there are a million questions. So just be aware of time as you go in the next few minutes. That's all.
let me do this in 2 minutes, okay?
Yep.
And then I'm opening it up for questions. You have to be able to create a story to the lender. You have to let them know milestones, where you were, what's happened, and what will be on the other side when you come out of it. Let them know how strong you were. And I'll just leave it at that for right now. And if we have time, I'll come back to the last couple slides.
Perfect. So, okay, perfect. I'm going to unmute Bob. Bob, you've been answering questions left and right. And then again, just as a reminder for everybody, if you just raise your hand, I'll be able to unmute you, and then you can speak to Rich or to Bob and ask your questions directly. But Bob, a couple of questions. Kathleen Doyle asked you, do you have to take all the money out of your line of credit before you can get SBA money? Can you answer that for us, please?
Yeah, and the answer is no. And in fact, if you don't need to leverage up, it probably puts you in a better position to qualify. If you have to use it, use it. But no, there is no requirement that you have to tap out certain funds to qualify for additional funds, to my understanding anyway.
Yes, that's right.
Yeah, go ahead, Rich.
All bets are off.
Bob, if you received an SBA 504 loan to purchase a building in the past year, will that affect you getting a disaster loan?
No, it will not. We have tons of clients who, if you go back just a few weeks, right, we're giving SBA loans out to. And they're obviously, in the same predicament many are. So no, it doesn't prohibit. The big thing is that you have to have clean credit history with the SBA. And quite frankly, with any guaranteed debt, FHA lending and things like that, the SBA is pretty clear in its SOP that if you ever defaulted on government guaranteed lending, the SBA is not the place for those individuals, unfortunately. Having an SBA that was done recently actually might be a benefit, right? You've been through the process, they know you, you're in good standing, so you could be in pretty good shape.
Perfect. One more, and then we're going to unmute Chris Yang to speak. There seems to be some frustration with EO members. I see this being upvoted. Why even bother with a SBA loan if a personal guarantee is required?
Yeah, so typically in our space, everything is personally guarantee required. The bank wants to know that the owners, because these are closely held businesses, are standing behind the company. They are secondary sources of repayment, though. We really do rely on the business to make those payments and the owners to stand behind them. But when you do get a loan through the SBA or just through the commercial side, it doesn't show up on your credit report, which is a good thing. And a lot of times the terms of what you could get are much more beneficial. For example, the SBA is very attractive because you have the ability to get longer term fixed financing at pretty good rates as compared to what you might get on the personal loan side. Personal mortgage excluded, right? Because that's the best financing you could get. But outside of that, it is pretty attractive rates and structures.
Pretty much anywhere you're going to go for debt, they're going to require that you sign personally. And just look at risk for them versus reward for you. And in all the years that I've been working with clients, I have never had a client having to tap into their home or personal things on loan. It's just something that gives a sense of comfort, and it's a lot of work to go through that process. So it doesn't happen very often, and you have to figure out if it's a risk that's worth taking for you.
Perfect. Chris Yang, if you could tell us where you're from and what business you're in and what your question is, please.
Was that to me?
It was to Chris Yang or Yoon?
Could you ask it one more time, please?
Chris, I'm unmuting you now. If you could tell us where you're from and what your question is.
Hi there. Can you hear me?
We can.
Okay, great. I'm based out of New York, and in the kind of technology sector. And so the question that I had was, was actually one that was upvoted on the Q&A here, which is in terms of the level of hardship that needs to be able to qualify, and also the timing of the SBA loans, and whether or not like the timing is good now versus even a week later, and that sort of thing.
Okay, I had a hard time hearing you. I think you're asking about the timing of the SBA loans, and then
Yes.
go ahead, Rich.
What I would say is, if you're going for the fast track loan, in theory, it can be turned around in 36 hours. I think that's going to be difficult to do because of the amount of loans they're going to get. If you're looking for an SBA loan for disaster, you may be looking 3 to 5 months out before you'll see that money. So you have to factor that in. And there again, there may be a fast track because these are extraordinary times. And the only good news here is a political year. So everybody's looking to look good and create situations where you can get money faster. I just read that in New York State, that mortgage payments have been suspended for everybody for 90 days. So there's a lot of things in the works right now, but for at least 3 to 5 months before you're going to see money from a disaster relief loan, and weigh that against the fast track loan, particularly if it goes up from a ceiling of 350,000 to 500 or $1 million.
It's a big difference. All right, I'm seeing most people are asking their questions in the Q&A panel, so I'm going to take this top one that's been upvoted. Will we still qualify if the financial impact has not hit us yet, but we expect to based off of future lost sales due to closures?
Yes, and let me share with you what you want to do. You want to show in that cash flow projection that at some point, April, May, June, wherever it is, you are going to be in a situation where your cash flow changes and you're going to be into a burn rate. That's the importance of doing these cash flow projections, to show them what you anticipate happening, and this way you can get ahead of the curve.
Rich, if the SBA loans are going to get better, this is from Jeff Berkowitz, if the SBA loans are going to get better, should we wait to apply, and what kind of delays and backlogs do you expect? That's upvoted 15 times.
I think you're going to hear a lot in the next week. And by the end of the next week, you should be pretty clear on what the terms and conditions are going to be. They can't afford to wait but so long. And once you get started, or they get started with you, they've got money that they want to give you if you qualify, if you give them the documents, if you tell your story, then you're in a good position to get it. And yes, it doesn't matter that you don't have the problem today, but you see it coming.
Perfect.
And I would add to that that there's two different sides of this, right? There is the disaster relief side, but not to overlook the fact that the banks are still lending through the normal SBA channels, and so if they do change the policies and they increase the amounts or the amounts that they're willing to guarantee, the banks that don't have to run through the SBA for approval, they're called PLPs or preferred lenders, they still have the capacity to, still administer the programs. The only thing that changes is just the guarantee they might get and some of the nuances of the deal, but nothing changes from a workflow perspective. We don't have to go to the SBA and then get in the queue with everybody else to wait for them to review the deal and then do a second sign off, because that's essentially what they're doing. And so, as you're looking at your different banks and lenders, if you want to apply for just conventional or your traditional type of SBA programs like the 504 or like the SBA 7A, you might just want to ask them, hey, are you a preferred lender? Can you approve with your own credit authority? Or do you have to go to the SBA as a second signer? And that'll give you an idea of what that time frame might be. And it might be extended if they have to go to the SBA.
So this is a wonderful point you just raised, Bob, because virtually all SBA loans come from preferred lenders. So that's why it's important to go to your bank to find out who the preferred lenders are and make the decision, am I better off doing a program with a preferred lender or going directly to SBA? What I would say is go for everything. Be open to understand what may be available. When I say go for everything, look at what the options are and then be prepared to find the best option for you and what your plan B and plan C might be.
Perfect. Rick, Brian Devins. Brian, where are you, which chapter are you from and what is your question?
Thanks, guys. Charlotte, North Carolina. And just wanted to see if I could get a little bit of visibility into the process of this. I see that the online application is pretty basic, and I haven't done the process personally. So what does that look like? When does that story come into play? When do the documents come into play in terms of financials, all that kind of stuff?
In the past, up until yesterday and maybe tomorrow, they're not going to look at anything until you have your ducks in a row, which means your tax returns, which means your P&L, which means your balance sheet, which means your personal financial statements. And you're absolutely right. Don't be afraid of the documents. It's just a process to fill them out. When I went for my first SBA loan, I called SBA and I said, what do you need? And they said, please fill out the paperwork. We can't do anything without it. And that's when I made the decision. Not only was I going to give them everything they asked for, but I was going to give them more. I was going to create a story and a package so it was almost impossible for them to say no.
One quick just correction just from a language perspective. The SBA themselves does not provide loans, only banks do. It's just where do you go through the process. Let me see here. Bob, do you want to add anything else to what Rich just said in terms of the process, which is what Brian Devins was asking about? Anything else he should be aware of?
So two things I'll add, and I think the first thing that you would mention is that the SBA loan, SBA doesn't lend direct, it only offers the guarantee. So just to make sure there's a clear line in the sand on that, when it comes to your SBA 7A loans that are administered and done through the banks, that is correct. The SBA is only guaranteeing it. It is the bank's money that is being lent. However, in times like this, through the disaster relief programs, that money, and we are directing individuals to go right to the SBA and you apply there, which is what Ryan was looking at, because that money is coming directly from the SBA. So when you hear, the press conference of the president talking about money being released to the SBA, that is direct money coming from the SBA.
And that a loan officer makes the decision on how much to give you, what the interest rate should be based upon your credit, based upon the risk factors, and for the number of years that you will get. So it's very important for you to make the decision which path you want to go. There are no bad paths in this regard to anything SBA related if you're not concerned about the personal guarantees.
Rich, one from Brian, and then we're going to go to Josh Setzer, and then we are at time, and I want to be sensitive to everybody's time, but we do have a few things to wrap as well. So first from Brian, the online application does not have an option to attach paperwork or the story to this. After you submit the initial application, when does the SBA reach out for those documents?
Okay, so what will happen is you're going to submit a form. They're going to ask you for information. And once they have that information, they will contact you to follow through. I would say with any information you send them right from the start, include your story, include recast tax returns. And I want to add this quickly. They want to look for profitability. So if you do a recast tax return similar to an EBITDA, you're going to show that you made money from the business, but get it together, get it to them as soon as you can. That way you're on the top of the pile.
Perfect. Josh Setzer, I'm muting you. Which chapter are you from and what is your question?
Hi, I'm with the Raleigh-Durham chapter, and my question was, if we have already started down the path of filing for a tax extension this year, am I correctly understanding that we need to change course there and get that fast cycled, or is there a path by which you could do an SBA application using prior year returns?
You can try, but I would say if you can show a tax return for 2019, you're in much better shape.
Got it. Thank you.
And I would only add that they do, I mean, they can be done. You know, again, it depends upon is 18 your better year, is 19 your better year if you really want to show. And they will ask for a copy of the tax transcript just for proof that it is on extension. And then they'll use some internal numbers that you'll provide, QuickBooks or whatever it is.
And if you, by chance, have reviewed or audited numbers, that will help tremendously here.
Perfect. So everything that we've talked about today will be at eoraleigh.com/coronavirus. There are a number of questions that we didn't get to. One that's voted pretty high, so I'm just going to ask this one before we wrap here, is what level does hardship need to be in order to qualify? Is there any way to answer that, Rich or Bob?
Yes, it really doesn't matter. It's a question of making the case for what you lost and what opportunity will be available. I work with a musician by the name of Kat Edmondson. She was just on tour. The tour was just canceled. It's going to cost her sales in her new album. It cost her money there. And those are losses that she will be occurring as a result. They won't show up anywhere, but that's the case you make to show lost opportunity. So that's why it's so critically important that you tell your story. And anybody that calls me during that half-hour call, I'll be happy to look at your situation and offer how you can best position yourself to get the guest you want with the loan the amount of money you're looking for.
Rich and Bob, one more that's been upvoted. Can you get both a line of credit and an SBA disaster loan? Part two of the same question is, how do you anticipate this affecting the existing banking relationship? So would it break a covenant that you're not supposed to take loans if you take one of these? Do you have to work with your existing lenders on this process?
Bob, I'll let you tackle that first.
Sure. So and I think I have the question here just to make sure I answer everything. So yes, if you do have covenants in your existing relationship, I would work with your existing lender and just have a conversation with them about what your plans are. I imagine if you have some of those, covenants in place that might be monitored as well, so you're already having pretty in-depth conversations with that lender, and you might be having conversations about them on your conventional financing as well, about deferred payments and things like that. So I would absolutely have a conversation with them just to make sure you're not going to trip anything in the future. I would say that banks, again, I can only speak for Fifth Third, but generally are going to try and be very accommodating to a lot of these things. But to the initial conversation that happened, communicate, be proactive, and I think it should all work out okay from that standpoint. And I think the other question was around, was it a line of credit? So the disaster loan is really it's just a term loan, right? There is not a line of credit structure. The line of credit program is more administrated through the banking sector. And so I do not believe, and Rich, correct me if I'm wrong, but I don't believe you could apply for both at the same time, because the SBA line of credit would be done through your bank and not through the SBA, which, again, is that clear line between, is the SBA the guarantor on the deal or the direct lender on the deal?
Apples and oranges. As you pointed out, generally, I don't know SBA doing line of credits. They do term loans. And I was just looking at a loan that a client received a few years ago, $350 from SBA for a term loan that was spread out over 7 years, and a line of credit with their current banker, which was a traditional line of credit loan with the bank and whatever the terms of the bank is. So you can do them both simultaneously, and I don't think that affects anything. One is short-term, one is long-term. One is operating capital, one is for growth, and in this case, sustainability.
And just to back up on that real quick, just to add, so the SBA does have a line of credit programs, just to make sure people were aware. Some are done through the SBA Express. Those are typically the 350 and below. And then the larger ones are done through the SBA Cap Line program. What happens though is not every bank participates in those programs. And so you have to look at the bank that specifically does.
Thanks, Bob. I just learned something.
Hey,
You get it.
A lot we're talking about is about contingency planning. I see Randy Nelson on the phone. Randy, your webinar is next Wednesday at 2:00 Eastern. Do you want to talk for a moment about what people on this call could expect on that webinar?
Sure. First of all, Rich and Bob, great job. This is practical information that is so important to everybody. And my goal for next Wednesday's call is to do the same. It's titled Contingency Planning, Crisis Leadership, and the Reset Button. And what I would say is everybody I don't want to say everybody, but there's a whole lot of businesses in EO that are going to be in the position where you really need to come up with a contingency plan because there's so many uncertainties. So for next week, my goal is to have a bunch of practical applications that you can put immediately to your own business after the webinar. So look forward to as many of you, any of you who see yourself in a position where you're going to have a contingency plan. I think it'd be good information for you to have.
Randy, thanks so much. Todd,
Yeah,
I see you.
Hey, Matt, just one other thing just to add to that. Having gone through 9/11 and the 2007 crisis, this will also come from experience with not only my own businesses but other businesses over the last 20 years, having gone through this. So again, practical will be the key.
So thanks so much, Randy. Rich and Bob, do you have anything else that you would like to conclude with? And I'm going to turn it over to Todd.
Well, what I wanted to say is if you reach out to me, these are free calls. It's information I'm happy to share. I owe a tremendous debt to EO, and I love entrepreneurs. So any specific questions you have, don't be shy, sign up for it, and we'll cut to the chase, and I'll help you any way I can craft your story and make the best decision for you on how to get through this crisis and come out on the other side.
Super nicely, Rich. Thank you. Did you have anything you wanted us to end with?
Yeah, wonderful. Oh, sorry. Go ahead.
Bob, over to you.
Was that you guys? I don't know who you're waiting for, but this is Bobby real quick. I just want to say thank you for the opportunity. I'm also available, and I put my cell phone number in the bottom line there if anyone has any other questions. But I think what Rich does provides a great service. He's got a lot of good insight, and we'll all get through this together. I appreciate the opportunity to be involved.
Okay, can I ask you one question, Bob, that would be important? I've never done this with you. I'm in this situation right now. Can you help me?
The question is, well, let's get on the phone and figure out what you really need and what's important. There are a lot of tools at our fingertips. Sad to say, we 100% of the time can't help everybody. But if we can help, we do try and direct people to individuals that have additional resources and might be in a better position to help. We try within our power to not say just no. We try to say no, but here's what we think you can do. And when we can, we absolutely like to say yes.
Thank you again.
Yeah, thank you both for being here. Todd Atlas here again with EO Raleigh-Durham. Personal experience. It's nice to have both somebody who's knowledgeable on the consulting side that really understands SBA loans and a banker that gets it, because in my personal experience trying to apply for commercial building loans, there is a lot of unfamiliarity with these loans out there, and some of the bankers will turn you away from them because they're afraid of not understanding them, the cumbersome paperwork nature, or just their lack of familiarity with the process. So you two are just wonderful resources as the quality of these loans present themselves, and we might want to avail ourselves of them. Matt, what we should do is put both Rich's information as well as Bob Young's information and Sherry Breen's information, who works closely with Bob in our kind of coronavirus. It's eoraleigh.com/coronavirus so that people can call them and they can learn a little bit more. That's all I have. I'm really excited about Randy's webinar on Wednesday. One thing that I would propose, since we still have 170 people on the call, is that we kind of conclude our formal remarks, but those that want to stick around for a few minutes and have Q&A with Rich and Bob, I mean, I'm kind of waiting for a few of these burner questions myself. If you guys are okay with it, we've been almost an hour. We only scheduled 45 minutes, so I know EO members' time is precious, but would you guys mind hanging around for a few minutes for a few more questions? Is that okay with you, Matt?
I'll hang around as long as there are questions to answer.
It's good with me as well. Can you hang on for a little bit longer?
Bob?
Yep, and I'm good on my end, guys. Yeah.
Perfect. Well, thanks everybody for attending. This will start the informal process. Please answer that poll on your way out. And Todd, let's start with Danielle Simones, who just raised the hand. And Danielle, I'm not sure, where are you from, which chapter, and what's your question?
Hi, I'm from the Tampa chapter. My question is, if I already have an SBA loan with a bank, that is it's not that big, it's 170 around that thousand. Can I get into the emergency loan program directly with the government or not?
Yes.
Okay.
You can come in, but the research I have done said this is a whole new day, and this is disaster relief funds. And they're assuming you're going to have other loans and things. But I think one of the things Bob's going to say is, what's your track record? Do you have a record of paying these loans back? And if you have, your credit is in good standing and you're a good company, go for it.
Yeah, and what I would add to that is there's another option too. If you didn't want to take out additional debt, I'm not sure who the lender is, but there is within the SBA SOP, you do have the ability to defer payments. If it's with a bank that doesn't sell their loans to investors, that has it on the books, like a Fifth Third, a Wells Fargo, Bank of America, PNC, these banks, they portfolio the loans. And so we would have the ability to defer payments for up to 6 months. If it's with someone who sells their loans and your loan is now with an investor, they have the ability to defer up to 3 months. Anything thereafter would have to go up to the investor for approval, and that's a convoluted process because the investors basically buy pools of these government guarantees. And the easiest way to kind of know is if you're with a investor or direct bank, you may know right away, but if you have a fixed rate versus a variable rate, a lot of these variable rate SBA loans are sold to the secondary market. If it's a fixed rate, there's a good chance it might be with the direct lender itself and easier to negotiate.
And I'd like to add one thing to that. So let's say you're in a situation where with your current SBA loan that's been sold to an investor of some sort, you could ask the SBA in your disaster loan recovery money to pay that loan off. And that way, it's not an issue or a challenge.
Perfect. Thank you. We have a question from Clay Reel. If we have credit available, would you suggest accessing the money in case credit markets dry up?
Say that one. I think I heard you say if you have money available for a line of credit.
Yeah, should they access the money now in case the credit market dries? One of the EO South Florida persons said take the money as soon as possible because they may lower or delete your line of credit. What do you think about that?
I just advised 2 clients to do that last week. As long as the money is still there, it's better in your bank account than to have to go back to the bank later. And if you don't use it, it's a line. You can always pay it back.
Is that same thing true for home equity lines? If somebody has a home equity line that they're using to fund their business, should they pull the money out there as well? Could that dry up?
That's a refinance question probably. And it depends on who the home equity loan is with. Every home equity loan provider has a different strategy, and most of those loans are sold to other people.
Okay. I see it. I'm looking for questions that are typed where the person is still online. And let me see here. Lance is not. Let's see if Kathleen is. Okay, Kathleen Doyle asks, is it important to get the SBA Fast Track Loan app in as soon as possible if they're going to run out of money?
I think it's important, Kathy. Good to know you're on the line. It's good to start the process and see what you can get now and share with them very clearly what the potential losses are. Create that curve between where you've been historically and what you project the losses to be, and then go for it. I think a lot of us whose businesses are not closed and we're still doing businesses will be in a much better position to know their situation in 45 days. But there's no downside in starting the process and saying that this is what you anticipate is going to happen. And that's why that cash flow projection is so critically important.
Perfect. Jennifer Wynn asks, my lender said they aren't taking any more SBA Fast Track loans. Are these still accessible via the disaster loans, or should she go to a different bank? I would add to that one.
A fast track loan, I think you're going to be able to get directly through SBA.
Bob, do you have anything you'd like to add about the Fast Track Loan and the lender saying they're not taking them anymore?
Hey, it's the first I've heard of it, so unfortunately I don't have much insight to it.
But Bob, I'm correct that you can go direct to SBA for a fast track loan?
So we don't deal too much in the fast track loans. We deal with the SBA Express, and I don't know if it's just a difference of terminology, but if it's the SBA Express, then that is administered through the banks, and certainly we're still doing those. But if the fast track is something different, then I'm just not too familiar with it.
We're probably talking the same thing.
Okay, yeah. So maybe certain lenders. So what you get out there is you get a lot of online and fintech lenders that do a lot of the fast track or express type of loans. So that could just be that maybe that particular lender isn't doing it, but banks are certainly still doing it.
Shopping is a very good thing to do, even if you've got something nailed down, to help you get the best possible deal. And the more shopping you do, the more you'll learn about the process. Become a master of the process. The paperwork has to be done. It's table stakes, but understand the process.
Rich, Edwin Carrion is asking, is it easier to get an SBA loan instead of a, quote, traditional business loan?
It may be now. And even with traditional business loans, I've got loan packages up across the top here. Virtually half of them were SBA guaranteed loan. So if the bank will work with you, as Bob said, and the bank approves it, you don't have to do anything with SBA, pretty much, but give them the paperwork and information they need.
Perfect. Jason Bukima, I'm not trying to say your last name. Can you apply for both the Fast Track 350 and the regular 2.5 million? If the Fast Track is approved, would that affect the other application negatively?
I don't know.
Bob, do you know that one?
I'll take a stab at that one. So if someone came into us and said, hey, I want to buy a building for, $2 million, and we would typically put everything together because the total exposure, is a significant dollar amount. They run through the same, at least for us, they run through the same underwriting channels. And so there's not, one goes one way and one goes the other. So, if you think that the fast track or the SBA Express is a more important need, that might be something to apply for first while we're working on doing the larger facility. And we could certainly do it that way. And no, it doesn't necessarily negatively impact the application. It just all comes down to cash flow and the ability to, service the debt adequately.
The one thing I would add to that, since there's no prepayment penalty, you could ask for the larger loan and say, I've got the fast track loan or the express loan, and I want to pay that off as part of what I'm going to do with the funds I get. And this way it's a clean slate.
That's a good idea. Okay, cool. Mike Ferris is asking, normally when getting financials, I do put my best foot forward and best look at the company. But for this fast track loan, am I showing where we're going to go in the red, in present, and more of a worst case scenario? So does he need to explain what the disaster is for his business, but then also the best foot forward?
Absolutely. Let them know that you get the picture, that you're not in la la land, that you're not a deer in the headlights, and say, this is what's going to happen. This is how it's going to happen, and this is why, and this is what we want to use the money for. And that way, there's a greater sense of comfort with giving you a loan. Nobody's going to hold you accountable for the virus.
Perfect. Thank you. Let me see here. Richard Shenick just had a great clarification about the SBA does not provide loans. And Bob, you've already clarified that the SBA disaster loan is directly lent from the SBA, but typical SBA loans require a bank to provide the financing. So I think you already answered that well. Thank you.
Exactly. And I just want to add one other thing. If you have a good working relationship with a bank, then you can go to them, and if they're a preferred lender, they'll try to make this happen. Most loans for small businesses are SBA loans, SBA guaranteed loans. I don't know what the numbers are off the top of my head, but what I can tell you is that for banks, this is a great way to take a loan in, because SBA is going to guarantee up to 80%, and the bank is going to get all the benefits of interest and everything else that goes with it. So it's a wonderful win-win-win program.
Perfect. Jeff Wimmer would like to know, can you qualify if you are a USA-based corporation or LLC with USA-based employees, but have foreign owners as they run a related business in another country that acquired this one?
It depends. It's very tricky. You have to be a citizen, or somebody has to be a citizen that's a significant owner, and then you have to show what's happening here, and you have a near shore or a long shore staff that takes care of part of this. I think that'll be fine.
So I'll just kind of answer that too, that it does get tricky, as Rich mentioned. There is some ability to do it. I'm not as well versed in it, but it is in the SOP. And if you have questions, I could help follow up with it. You can either be a citizen, individuals with green cards, and then there's some requirements about how often you are, in the country, or do you have, closely held management in place. So, and they might even be asked to guarantee a loan in lieu of the foreign owner. So it does get pretty complicated.
And there again, become a master of the system, research it, find out, become an expert, so that when you go in to talk to any lender, you can say, This is what we know. Is this right? And let's move forward with it.
Thank you, guys. Cole from Austin, Texas asks, can you talk for a moment about asset-based lending and factoring options during this time?
Well, the thing about an asset-based or factor lender is they are not lending money to you. Excuse me, they're looking for the credit worthiness of the receivable. And they will make the decision on what receivables they will take and what receivables they won't take. And they're pretty damn savvy about determining if someone is a good credit risk or not. And basically, you have nothing to lose. And frankly, if an asset-based lender doesn't want to take the liability on, you probably shouldn't either.
Okay. Lisa Hall is getting crushed as a live, she does a sports and special events business. 100% losses. How many months should she project out for her losses when applying for an SBA loan? She does 80% of her business between March 15th and July 31st, and there is no money coming in right now, only refunds.
Okay, so there's where a historical cash flow projection is invaluable. This is what we normally do from March to July. This is what we already had on the books. This is the revenue we anticipated we would be receiving. This is part of telling the story. Make it clear what the losses will be as a result of this. And then on the basis of that, come up with the number that you think you should ask for. And probably you want to include into that, once we get back, whenever that is, there's going to be expenses and costs you will have just to open your doors again.
Yeah, sorry to hear that. That sounds like a very tough situation. I think Sean, I just sent you an email. Shan, your question was answered. And then Lisa Hall, okay, she's clarifying it. She's sports and special event insurance for youth sports and special events. So she has zero business. But I think the same answer. And Lisa, certainly you can reach out and schedule a separate call with Rich, and be happy to talk.
Yeah, I have thoughts on it. It's still revenue.
Perfect. I think we have answered every question for anyone who is still on the phone. Let me look here. I do see one that's been upvoted a few times. I heard this discussion that SBA debt used for payroll might be forgiven. Is this even a possibility? That would drastically change how we use our cash. Rich or Bob, have you heard anything about that?
Bob, do you want to start off?
Yeah, I would say I've not heard that it's going to be forgiven. Again, things are fluid right now. There's all kinds of ideas floating out there, but nothing that's official. The disaster program specifically states in there that the use of funds through that term loan program are for things such as payroll. So I would find that hard to believe, but again, I've not heard anything definitive.
This is definitely what I'm hearing too, so that I'm going to believe it until I hear otherwise. But once again, everything's fluid, everything's changing. And right now, it's a critical issue for the country that people be able to pay their bills. So these are extraordinary times. And my guess is that that will be part of what you can borrow for. And my understanding is that you can do that with the disaster relief program.
Perfect. What does the SBA mean when it says to qualify, you must have access to other credit? How is that determination made? Would credit cards count as other credit? Would home equity units count as other credit? What does that mean?
SBA is going to require a personal guarantee and liens. Credit cards are fine. as long as you're not running up $100,000 in interest a month. They don't care about that. That's all part of doing business. So I don't really see that's going to be an issue.
So I'll add to that too, what Rich was saying. So it's what is specifically called within the SBA is called credit elsewhere. Because the SBA is saying, hey, look, we're trying to, help support business owners that really need this access to capital. We don't want to give it to someone who, has the cash to do what they want to do or could go get conventional financing. And so the rules recently changed as recently as like 5 or 6 days ago. So I don't have the exact numbers handy, but it's essentially to say, if you can do what you want to do and you have enough personal liquidity to do it, you may run into problems through the credit elsewhere. But it does not have anything to do with, your credit cards or things of that nature.
All right, question from Jason. Jason, what chapter are you from and what's your question? Sorry, I'm unmuting you now. There you go.
Okay, cool. So two questions. So I do charter cruise ships, and we had about 750,000 last month, and it's basically halted down to zero. And my question was, when we do this application, we had four cruise ship charters that were at the contract phase about to charter, and we've advised them all to not do that for the time being because the cruise industry is basically halted completely. So when we do those projections, could we put those 4 cruises in there that were basically at the contract phase, or only the ones that we had contracted?
If you had a work in progress and you can document it in any way, that's fine. When 9/11 occurred, one of the clients I worked with was in the furniture industry. The high school furniture show had half the people attend. The Atlantic furniture show was canceled. What we did was we projected how much money we anticipated to do at those shows, and that was included in our package, and that was accepted.
Jason, sorry, it sounds like a very tough situation.
Yeah, no worries. Thank you. I had one other question if you got a sec. So during this period recently, I had to take out some, I believe they're called NDAs, or kind of like shark loans at like 30-40% in order to pay my staff, which I actually let go of just about all of them this week. But how do those affect this application? I have like 5 or 6 positions right now with varying amounts. And how does that kind of affect this application with the SBA?
I would say that you want to pay those off as part of what you're going to do with the proceeds.
Right, for sure.
Get out of
Definitely.
I lost you there. Rich, was that the end of your sentence?
I'm sorry. What was that, Matt?
Was that, I just lost you. It got just, you stopped for me. Was that the end of your statement?
Okay, what I was saying was that, please ask me the question again, because things are swarming through my head.
Yeah, so I have a couple of positions, I guess is what they're called, with MCAs. I just learned that that's the name of kind of this industry of shark loans, if you will. They're 30 to 40%, 100,000. I have a couple of them, I think 5 or 6 positions. How does that affect this application? And I guess, yeah.
Okay. What I was saying was that put in the loan that you want to pay all of these off. Mm-hmm. And how much revenue that'll save you in terms of what you're paying out. Just make it part of the package. This is something I want $300,000 to wipe out all other debt.
Okay.
Particularly high interest Guido type debts.
Yeah, that's basically what they are.
Yeah. Can I speak to
I
that?
muted you. Go ahead, Cole.
Can I speak to that real quick?
Yeah, please do.
So this is Cole Harmonson from, I have a company in Austin called Dare Capital. I've been in the finance business my whole career. I'm an EO member. On your MCA loans, I would, and Rich and I are good friends, so I can disagree with him on a call like this.
Will.
On those the MCA loans, if you want to email me, I don't think you want to just take other proceeds and pay them off. You know, obviously, you know, you want to do what you said you're going to do, but there are various and good ways to negotiate with those guys. And I have a person who, I'm sure he's very busy right now, but I have a very good contact who's deeply experienced with dealing with MCAs.
Great.
And if you can email me offline, I can make an introduction to you and help you get those renegotiated, because you want to start that process now.
Yeah, I was going to call them today, so if I could have someone with experience there, that'd be much more beneficial.
Yeah, I'm gonna put my email in the comments here, and just shoot me a note, and I'll make this introduction.
Great.
Pennies on the dollars should be what you're negotiating with, especially in your circumstance.
Great. Thank you, Cole.
Yeah, absolutely.
Cool, that's awesome. Thanks so much. Adam had some questions. I'm sorry, Adam has his hand raised. And you can go ahead and speak now.
Yeah, there was a question. I don't know if it got answered, but I saw it on the panel too. Just different rates available for these different SBA products. So just to give you some background, I was in the middle of a partner buyout through a traditional SBA loan. And then I think I was essentially approved, but they just wanted my 2019 taxes. And then, you know, I don't think the partner buyout is going to go through, but I'm just thinking in terms of capital, is it best to continue with the existing SBA loan that I have, or go through one of these other SBA products instead, based on rate and term and, like, you know, loan term?
I would do your homework. The more you know, the better choices you will make. And it may be that because the world is upside down, whatever you're doing in this partnership buyout, you might be able to change the terms, the fees, and the timeline.
Got it.
So Adam, I would just kind of add to that too. I assume most partner buyouts are done through the SBA 7A program. The program is pretty prolific at being used for partner buyouts. And so you can typically go up to 10 years on that, you know, depending upon the collateral position. And it is a good product and program. If you're specifically asking about rates, you know, the rates on this disaster loan are lower, and they're lower obviously for the obvious reasons. But you know, rates generally for SBA are very good. You know, if it's with a fixed rate lender, they should be low fixed rates. Otherwise, if it's a variable rate lender, they're going to be tied to prime rate, and prime rate was, you know, obviously just reduced down to, I think, 3 1/4. And then the spread above that is what you'll get from a variable rate lender. But I think it's a good product, the 7A, if that's what you were doing through the partner buyout.
Yeah, I was doing that. I mean, I guess at this point it might shift, and then maybe I won't be buying out my partner and just using SBA capital to keep the business afloat. But I guess I would have to probably reapply for a loan if the purpose of the loan is now different.
If it's different, yes, you would. And because it's disaster relief, you have to apply directly through the SBA. The bank can't administer that like they would the 7A program.
Got it.
Can I ask Cole, if Cole Harmonson is still on the line? I answered a question about asset-based lending, and no one knows asset-based lending better than Cole. Cole, did you agree with my answer, or do you have a different perspective on how the market is today?
Am I off mute?
You are.
Okay. Yeah, I asked that question, Rich, and I joined late. I got my time zones off, so please excuse. I just wanted to know if you'd covered the topic. Obviously, we're getting very, very busy right now with you know, various conversations we're having with both banks and referral sources and other lenders. But I think, you know, some asset-based lending companies, particularly those in oil and gas, are going to get hurt pretty bad. But I think we're a great source for companies that, you know, if the bank if you have a line right now and the bank is like, look, I'm cutting your line back, or I can't give you any more, or, you need extended availability on existing lines, existing working capital lines, or you've never had one before, it is, I think, a very good time to at least have that conversation, with someone like Rich or, myself or someone else who, has been around the space too. And,
I want to ask you a question. I'm sorry, Cole, you talked about oil and gas. But what I wanted to ask you about is, given that asset-based lenders make lending based upon the credit worthiness of the receivable.
Right.
The question was, can I still use asset-based lending? And what I would think that the same rules apply. You're just going to take a harder look at who is a good risk at this time.
That's correct. Yeah, you're 100% correct about that. And I think we're looking at it, at least at this early stage of the game, as, a receivable-based picture only. Obviously, we need to understand people's background and that kind of thing, where we would usually underwrite also to the standards of profitability and that sort of thing, as you're highly aware. But we're getting very aggressive with that. So I think you're going to see that continue to happen. And it will also be particularly important once this is over with, when people start to grow again, or they're starting to try to recover, they're going to need working capital worse than ever. So that, we're already busy, but I think we're going to be even busier. So
I hope so.
Cole at farwestcapital.com was your email. Is that still correct, Cole?
That is not correct. I sold Far West in the middle of 2018, and I started another company. But it's Cole at darebizcapital.com.
DAREBIZ Capital?
Yeah, DAREBIZ capital.com. I put it in the panelist text.
Okay, sorry, I see that now. I apologize.
It is my. Did you get that from looking up on EO? Because I thought I updated it.
No, just from emails from you in the past, Cole. So that's all.
Okay.
I was wrong.
Got it.
Last, it's almost 4:00. There's still 70 people on. So a couple more. Bob, you doing okay over there?
I'm here.
I'm good.
Let's see. When can we start the applications? Do we need to wait for individual states to be approved?
It's opened up now to all of North Carolina. You can go on SBA.gov for disaster loans and see if your state is qualified, but I cannot imagine that there'll be a state that won't qualify within the next couple of weeks, because this is a national crisis. This is not a disaster that happened in Louisiana or the Outer Banks or New York City.
Okay. If your this is from Murtaza. If your company is not profitable but has plenty of equity in their commercial buildings and house, would SBA still approve you?
That is going to be pretty much a subjective decision. If you can show with recast tax returns what you're really doing, or that you have invested your money back in the business, or how do you tell your story so that you can be considered? I would say that at best it's 50-50, but I'd go for the 50 on the side of giving it a shot.
Yeah, and I'll just add, the collateral there helps. The SBA, there is still requirements as far as minimum debt service and cash flow. So it could be a challenge, to Rich's point, with the stories around it, and there's some type of one-time expenses, and maybe you had a bunch of money when you were starting up, you had to invest, but things are on the right track. Again, talk to the lender. If there's a good story, there might be someone out there to do it.
Yeah, it's all about the story to see if they say, well, there are extending circumstances here.
Awesome. We do have the 3 people who asked, how does this relate to nonprofits? Anything different or the same?
The good news is SBA disaster loans are available to nonprofits at a lower interest rate. You just have to be able to show how, same principles apply, how you've been hurt by this, what the gap is, how much money you need, what you'll do with the money, and how when the crisis turns around, you're going to be able to pay it back.
Okay, thank you for that. What's the best place? Do you need a business credit score? And if so, what's the best place to get it?
Well, first of all, I'm going to let Bob address that as well, but I would go to, for my personal credit, I would go to Credit Karma and find out where it is. The magic number today is 650. For business credit, Bob, what would you recommend that someone do? With the credit
So there is, I believe it's, I want to say it's Equifax that has the ability to pull business credit as well. And then if you go through, again, I think it is Equifax, you can get what's called a tri-merge, and that will pull all 3 of the reports in a similar fashion that, you know, Credit Karma will.
So Bob, is what exactly then for people listening is a FICO score? And is that something you get or that anybody can get their FICO score?
Yeah, anybody can get their FICO. Everybody has it that has established, you know, some credit. You know, when you apply for anything, your FICO score carries with you. And that's an important number. 650 is what Rich mentioned, and that is a good rule of thumb. What I would say, and I guess the way I explain this to a lot of folks is the SBA has its rules, and then how the banks apply those rules might be a little bit different. So the easiest explanation I could give there is, you know, some banks might be good with the 650 FICO, other banks might want higher. So again, it's important to know as you're talking to lenders, have those conversations early and upfront, just so you're not wasting your time. But yeah, FICO is, you know, very important. I don't know if people realize, but your business does have a similar credit score, you know, based upon, you know, your paydex scores, how you're paying your vendors and things like that.
I worked with a client in 2008, and we were able to get him financing when everything hit the fan. However, we waited 4 months for him to get his credit score where it needed to be. And there's all sorts of ways to increase your credit score by just following certain rules. So I would certainly look into that, and that's all part of getting your house in order.
What about D&B? And then I think this will be our last question, because it looks like everybody else who's asked questions are gone unless somebody else raises their hand here. But what about D&B? Is that a good source for business credit score information? And that's from Latasha Anaga.
It is, yeah. Everything kind of drives from D&B.
Perfect. Well, Bob and Rich, this has gone way over, and I appreciate you putting this much time into this today. Thank you very much. There are still 58 people who have been hanging on to hear the answers to these questions. So for everybody who stayed on this long, thank you. We're going to post everything at eoraleigh.com/coronavirus. We'll put Rich's information, Bob's information, the deck, the scheduling for the 30-minute calls, the recording. It'll all be there. So again, thank you all for participating. Bob and Rich, thank you again for doing this. And our next session will be a week from yesterday with Randy Nelson. And that is also, you can register for that on the site as well. Rich and Bob, thanks so much.
Thank you, Matt.
Thank you.
Thank you, everyone in EO.
Thank you.